Welcome back to Rise Exchange. I am Frank Omalape, live in Abuja studios. Another story now. The Chief Investment Officer of Heirs Energies, Samuel Nwanze, has shared the lessons that the indigenous oil firm learned from the 1.5 billion OML 17 asset acquisition. Nwanze spoke extensively to a Rise business correspondent, Bosin Omofaye, on why perception risk is a major factor for investors in Africa's hydrocarbon sector, and why he is optimistic about further investment.
Samuel Nwanze, thank you very much. It's good to speak with you here at the Africa Energy Week in Cape Town, South Africa. And I'm looked at what Heirs Energy is done, and I'm trying to understand the strategy, the philosophy behind the financing for such acquisitions and all of the operations. Talk to me, how do you get that done?
Yeah, so let me start from how everything kind of started. I mean, in Heirs Holdings, as you know, Heirs Holdings, we're an investment company. And we made a decision way back in 2011 that we wanted to do something about fixing the energy gap, the energy void in Africa, you know, the gap that we see. As you also will know, energy plays a critical role in terms of income generation for any country. Most countries that have a good energy consumption also have a high income per capita. So it was a major thing for us to look at. And then we started by making a commitment in 2012 to the Power Africa initiative by former President Obama, where we had committed that we'll do roughly about $2 billion in investments in the energy space. We started that journey in 2013 in the acquisition of power assets under the privatization program that the government was doing. That is Ughelli Power Plant, which we currently run. It's now a listed company, Transcorp Power PLC.
Exactly.
And when we got into that, we quickly discovered that it was very important for us to have control of the feedstock. So it accelerated our ambition to want to go into the upstream oil and gas space. So we started pursuing for opportunities at the time. We did a couple of deals. We were reserve bidder for a few transactions that were in the market at the time. And then we had the opportunity for the acquisition of the current asset that we run, OML 17, which was a bilateral conversation with Shell, Total, and ENI. We spent a bit of time raising the financing because when we had the conversation with Shell, it was around the time when we had the Niger Delta Avengers, the market had come to a downturn. There was a lot of issues with onshore Nigeria. And Nigeria wasn't very attractive for most of the lenders. And liquidity had dried up in the local market, so we had to look abroad. So we started the journey, went across and be able to put together a syndicate of lenders from virtually almost all the geographies, Europe, America, the Middle East, even the Far East, and in Africa, to raise $2.5 billion for the acquisition. And then when we went through the approvals, that was scaled down to $1.1 billion. So it was a long and tough journey, but we eventually closed the deal in January 2021, and we've been running the assets.
I love that. My point, and I want my viewers together is and everyone within the industry to understand what were the strategies that you deployed despite the circumstances, and what are the lessons you've learned in terms of what African energy companies, local, indigenous, who wants to help accelerate energy, a transition in Africa, energy security in Africa, would need to face from an investment point of view, from funding point of view? What are the lessons for you?
Yeah, great questions. I think I'll put it into three main buckets. So the first bucket is you have to focus on your technical capacity. I think at the end of the day, if you want to generate value from the assets you are targeting or the assets you invest in, you have to have the right technical capacity to deliver that. And I think Nigeria is so blessed and fortunate with that because the IOCs have spent almost 50, 60 years of developing and training Nigerians. You have very good talent as far as technical capacity for managing these assets. So that's one. The second thing is your financial, how would I put it, your financial structuring and management. So I say it because most times when people think about raising money for these deals, they only think about how do I get the money in. But there isn't more thought that goes into how do I structure the financing to fit the way my business will run and also to attract the right kind of investors. And the second leg is how do I manage my financing to ensure that I create value. And then the third piece is what I would call stakeholder management. And there's a lot inside that. So there is how do I work with the communities? where I'm operating, you know. The IOCs are different from the indigenous players. We as indigenous players, we have to stay closer to the community. That's why in our case in Heirs Energies, our business is right where our production is. About 85% of my staff work right there in the communities where we are producing oil. So the kids go to the same school, they drink in the same bars, they go to the same churches, they go to the same mosques. That way, you're able to develop a closer relationship with the communities. But beyond the communities, there's also the regulators, JV partners. So managing that whole stakeholder piece is important. If you get these three pillars right, then I think you can make a success of any investment.
The investment side of things, and going to Asia, Europe, Africa, speaking to different classes of investors and those who can bring money, investors to the project. And that's why I'm trying to find out what the lessons curve are, because in terms of how do you negotiate a deal, or in terms of what they want to see, in terms of with the bankability, they believe in you, the believability, they've got a project that's worth their money on the table.
Yes, I think the first thing I noticed, both when we're doing that thing, is that we first of all had to demystify Nigeria. You know, there is a perceived risk of Africa, and there's a real risk.
The real risk and the perception.
So the first step, we spent quite a bit of time helping investors understand that this is really what Nigeria is about. There's risk everywhere. I mean, my coming to sit here is a risk. I made an assumption that this chair is strong enough to carry my weight, even though I'm not that big. But the point is that we started by demystifying Nigeria. The second thing is internally, we also had to present ourselves to show that we're a company that you can trust. So our governance system, managerial capability, how we manage business and address risk to provide confidence to the lenders. And the third thing has to do with, and I mentioned this earlier on, structuring your proposal to the investors in a way that it meets both their requirements but at the same time meets your business requirements.
And that's where it's a little bit tricky, isn't it?
Indeed. You know, most people when they do deals, you say, I need a loan. And you go to a bank and say, I need a 5-year loan to buy this asset or to make this investment.
Yes.
But the question is, how do you structure that loan? Do you need 5 years or 7 years? Should you ask for a 1 or 2 year moratorium? Should you look at a sculpted repayment or a straight line?
And the state of the market in terms of interest, does that come into play as well?
Well,
exchange rate issue, for example.
Yeah, well, I mean, look at what the government has done. The government has really helped to enable business. I mean, the last couple of months since the new government came in, there was a troubled period when everybody was worried, but now we are seeing a lot of stability. If you look at interest rates, they are coming down. At least we deal on a dollar basis. We are seeing rates trend downwards, and we are seeing more confidence because people can now predict. People didn't like where the interest rate went to initially, but there's more predictability, and therefore you can plan. So I think all of those things are helping, and I do think that we will see more interest grow in Nigerian upstream. A lot of lenders are already talking to us to say, what more are we doing? And I think that's a good trajectory, for the country and for our business.
On the final note, is the investment paying off already? Are you making money already?
Absolutely. I mean, when we took over the assets from the previous operator, it was doing 27,000 barrels.
Okay.
Within 90 to 100 days, we doubled the production to over 50,000 barrels and 120 million scf of gas. We went through the difficult period when the theft almost wiped out the business. We fixed that problem, and today we are receiving almost 100% of what we produce at the terminals, and our production is on a growth trajectory. So, in terms of are we happy with the investment? Are we happy? Absolutely, we are happy with the investment, and that's why now, as a business, we are looking to expand and do more things with what we have, and also explore more opportunities out there in the market.
You've done $1.5 billion. How much is what you're doing next?
Well, it's a good question. I mean, but I think the potential in the market to do a lot more in the next 3 to 5 years is there. We've publicly mentioned that we are targeting to get our production to 100,000 barrels in the next 3 to 5 years. You can multiply that by the oil price and it gives you a sense of where that number will be. Yeah.
Now you smiling broadly. I can smell the coffee. Because you smell the coffee, and I can smell it as well. Thank you. It's nice speaking with you.
Thank you very much.
Thank you so much for speaking with us. That's Samuel Nwanze, who is the Chief Investment Officer at Heirs Energies, Nigeria's iconic indigenous energy company.